Beware the dreaded bull trap. Is this another perfect opportunity to buy the dip, or are the bulls going to get caught out as the smart money sells before the selling really starts to ramp up? I'm Biko Konstantinos, and that's what we're going to discuss today. If you enjoy my content, make sure you like this video, subscribe to my channel because my content's going to keep improving and providing more and more value to support your investing and education. Now let's have a look what the market might be telling us. Here we have the chart of the Nasdaq. We can see after the major sell-off we've had recently, there's been a strong rebound. However, the moving averages are showing us that there's certainly some negative pressure on the Nasdaq. We've seen the 50-day moving average actually start moving down quite sharply, and the current price is trading right about the 200-day moving average after dropping well below that 200-day moving average. So this 200-day moving average will be very important going forward, because if the Nasdaq does drop below that, sometimes that does act as a bit of a resistance level for major moves. In breaking news, Meta stock falls over 20% in after-hours trading after Metaverse project loses over $10 billion in 2021. So this could have an impact on the Nasdaq. Considering the Nasdaq is still trading a long way away from all-time highs, and one of the major stocks within the Nasdaq, the Meta platforms or Facebook, has dropped around 20% in after-hours trading, it doesn't look all rosy for the Nasdaq going forward, and this current bearish looking chart might continue to actually get worse and selling might start to increase from here. Now, to get a perspective of how far the Nasdaq could fall, we actually have to see how far it rose from the bottom of COVID. So the Nasdaq regained the pre-COVID level in very short time, but since then has risen multiples. This is why a lot of people are thinking we're currently in a bubble due to just how far the Nasdaq has risen and in such a short period of time. Going back even further, we can see the dot-com boom looks actually quite small in comparison to this latest rise. Now that doesn't mean we're going to come crashing all the way down like we did in the dot-com boom, but it does mean we've seen astronomical rises, which quite often can lead to sharp falls because the Nasdaq is actually so expensive at the moment, it's priced for pretty much perfection of all the major stocks. And as we've just seen with Meta/Facebook, it's very difficult to meet those perfect expectations, and if you don't meet it, you can get slammed. Next, we've got the Russell 2000 Small Caps Index. Now, just looking at this index, it looks very bearish. From COVID here, we've seen a rise that was nowhere near as strong as the Nasdaq. We've seen a real sideways topping formation, and we've seen a sudden breakdown lower. The blue 50-day moving average has crossed below the 200-day moving average, and they're both actually trending downwards. This crossover is called a death cross, and it basically places the Russell 2000 into very bearish territory and is looking extremely weak. The Russell is trading a long way below this support/resistance line, and the recent small rally went nowhere near as fast and high as the Nasdaq did, and this suggests continued weakness for the Russell 2000. Finally, we've got the S&P 500, which is looking probably the strongest out of the major US indexes. After the fantastic post-COVID rally, we've recently had this sharp fall, which took the S&P below the 200-day moving average, but it's rebounded quite sharply and is trading close to the 50-day moving average, which has started falling. You can see that while the S&P was rising sharply, it did track this 50-day blue moving average. So we've had a few times where the price has spiked lower than this 50-day moving average, but we've never seen a spike down this far. And the price is definitely not rising in the same manner that it previously was. So the chart of the S&P does not look anywhere near as strong as it previously did. It certainly could regain some momentum and continue higher to all-time highs, But the pattern, in my opinion, looks to either be a topping type formation or the start of a bearish type formation. So what's a bull trap? A bull trap occurs when the price gives a buy signal, when the price overcomes resistance, sort of like it's done here with the S&P. So many traders or investors will wait for a signal like this to give confirmation that they believe the uptrend will continue. So the bull trap occurs because the bulls all buy in thinking the market is bullish, but they get trapped because the price quickly retraces below that significant level, therefore trapping the bulls. And once the bulls see that, they might exit, and that might accelerate the actual selling and the fall in price. So is this current trading a bull trap? Well, it's impossible to know for sure because no one knows exactly what will happen in the markets. However, because I see some continued weakness in the Nasdaq and especially the Russell 2000, my personal opinion is that it definitely could be a bull trap, could trap some new bulls that bought the dip, and the price might start trending lower from now, and the bearishness that entered the market after the recent drop may very well continue and might even accelerate. I haven't even looked at the crypto market, which is still extremely weak, and nearly all cryptocurrencies are about 50% or more lower from their all-time highs. So to me, it doesn't look like all is well with the stock market and it'll just keep making new all-time highs. I feel like there's a higher probability of either a topping sideways pattern or an actual downtrend, which will become a bearish pattern going forward. If you're trading and investing in the market, the most important thing will be price action. Watch it very closely. Look to see what the S&P does around these important levels. Look to see what the Nasdaq and the Russell 2000 do. And then make your informed decisions as to how you will invest or trade. Regarding buying the dip, in an uptrend, it works extremely well in the start or the mid of the uptrend. But the longer that uptrend goes, the more risk that buying the dip will lead to losses. So if you're trading for the short to medium term, it just might pay to take some caution in the current market environment. So what do you think? Do you think the top's already in and it's all downhill from here? Or do you think this latest drop is just another blip into a strong year for the stock market in 2022? I would love to hear your thoughts if you could put them in the comments below. Check out this other video regarding a potential super bubble across multiple asset prices. Please consider subscribing to my content if you enjoy it, as my goal is to support you. I'm Vico Konstantinos, and I'll catch you in my next video.